And we're back on USA Prepares on 1340 AM, the Ozarks Big Talker. I'm Mark Wright, and my co-host is the original survival economist, Vincent Finelli. And Vincent, why don't you welcome Craig Smith to USA Prepares today?
I'd love to. Craig Smith is the chairman of the board of Swiss America Trading Corporation. It's an investment firm specializing in U.S. gold and silver coins. Craig Smith founded the company in 1982 out of a bedroom in his home with $50. It's since grown to one of the largest and most respected firms in the industry. Mr. Smith is an expert in many forms of tangible assets, including oil, precious metals, and U.S. collectible coins. Welcome, Craig Smith.
In bringing these preparedness expos around America, it's so desperately needed right now, Vincent, and we're excited to be a part of it.
Craig, thank you so much. I would love to lead our audience into some discussion about gold and the use of gold in preservation of their wealth. And the wealth that I see it is the storehouse of all of their labor so far in their life, and it's being eroded by the second through inflation, which is an insidious theft of that wealth. Can you address what is happening to gold and precious metals right now? What's happening worldwide? What's the demand like? What do you see, and why should we be interested in it?
Well, I think gold has reemerged, Vincent, back to its original position that it's held for thousands of years, and that gold is the ultimate currency. If you look at currencies around the world, there is a race to the bottom right now, whether it be the U.S. dollar or the Swiss franc, although Swiss franc is a lot stronger. But the German mark, Japanese yen, all currencies are devaluing as we continue to print money. And we think that it's just the U.S. dollar that's printing additional amounts of money. It's not. It's all the currencies that are based on debt-based systems. And just to put it real simply for your listeners, if I go out and work 40 hours a week, I take 40 hours of my life and I give that labor to somebody, and in turn, let's say I get paid $500 for that week of labor. Well, if our government can push a button and create $500 out of thin air every 2 seconds, they have now diminished my 40 hours of labor. They have, in essence, confiscated a portion of my life through the money system. That's why we wrote the uses of inflation, a report that we did for Congress and Senate. We sent a copy to each one of those senators and congressmen, showing them that don't they realize that you take a certain portion of my labor through taxation already, so how is it fair for you to take another portion of it through the uses of inflation? And that's what most people don't understand, Vincent, and that's what we try to explain in our materials. Now, if you look at how gold has functioned within that realm, it's simple. If you look at the hours that you used to have to work to buy a new home, and you put that money in gold, that same gold would buy you a new home, if not even a nicer home. But if you had put that same amount of labor in the form of dollars and left it in the bank, you couldn't even buy a new home. Gold maintains its buying power. And I always try and use this example. Let's say it costs you $1,000 a month to live, and gold is $1,000 an ounce, just hypothetically. If now your cost of living goes up to $1,500 a month, gold will go up to $1,500. And there's really a misnomer out there, Vincent. Most people think that the price of gold is going up. That's not really true.
That's correct. It is not going up.
That's right. Gold is constant. It never changes. What's happening is the U.S. dollar is dropping in value, so therefore it takes more U.S. dollars to buy an ounce of gold. But if you looked at all the international currencies, you can see gold has actually come down in price in U.S. dollars recently, but gone up in price, say, against the Zimbabwe dollar. But once again, it's not really the gold movement. It's everything else priced according to an ounce of gold. That's why when America was on a gold standard, we were the envy of the rest of the world. But then Mr. Johnson started a welfare state in 1964. Mr. Nixon found him needing to close the gold window because on a gold standard you can't institute a welfare system or continue to increase a welfare system. And ever since then, Vincent, you've seen the U.S. dollar losing value.
Craig, you were talking...
That's why it's so critical in 1999 when gold was $265 an ounce to start converting dollars to gold, because we see the result. It's now currently $1,500 an ounce.
Craig, that's exactly when I started in 1999. I think I was in at maybe 285, 287. I did a little bit of research a couple of years ago. I was asked to talk to a Kiwanis Club, and I thought I would talk about inflation. And I found out that if you wanted to buy a brand new Corvette at any point in time during its production at list price, you could buy one with about 50 ounces of gold. And you can still do it today. You could take 50 ounces of gold in 67, 77, 87, 97, and today with 50 ounces. Could you buy a Corvette for 50 times 1,500? Absolutely. So you're absolutely correct, and I totally agree with your analogy. Craig, I have in front of me an autographed copy of a book called, or a white paper called The Uses of Inflation. It's signed by you, and it is absolutely fabulous. I talked to David at your company, and he said that I could give away 10 copies of that. Is that okay with you?
Sure, you bet. That's exactly the report that we sent to Congress and the Senate. And, Vincent, if you read The Uses of Inflation, most people think that inflation is just your price of gas going from $3.50 to $4, or your grocery bill going from $100 a week to $125 a week. That's price inflation. That's not actual inflation. Inflation is always a monetary phenomena. And what most Americans don't realize is that going clear back to the days of Vladimir Lenin, he talked about inflation and how it engages all the hidden forces of economic law in a manner that not one person in a million can diagnose that it's happened until it's already occurred. In other words, your government, and it's sad that we even have to talk in these terms, Vincent, can actually pick your pocket without you even realizing it's been picked. You almost thank them.
They've been doing it for years. There's a line that you have here in the inflation deception section, and you say rising commodity prices won't cause inflation. Now that's a quote that came from CNBC. Unbelievable.
Yeah, and think about it. We have seen corn go through the roof. We've seen cotton go through the roof. Now, we didn't see that at the consumer price levels because the pass-throughs hadn't occurred. That's called input costs. In other words, if I make cornflakes, my input costs start going up. I reduce my profitability to the point where I have to make a profit, so I have to raise my price to the public. Those pass-throughs are starting to occur right now. And you try and tell the average housewife that has been shopping for more than 5 years that her food bill is not going through the roof.
Craig, this is Mark, and I can truthfully attest. I'm married, and I have 4 kids, so I got to buy a lot of food, and you are exactly right. It is going through the roof. Well, fuel prices, you name it, everything's going higher. But this inflationary situation that we're encountering, isn't it self-induced by the government and the Fed? Is that truly what we're fighting here instead of all these other different causes?
Oh, absolutely. Look, make no mistake about it, Mark. The government's in desperate need of money. Now, there's several ways that the government can go about getting money. We know that they can tax you and they generate money, but at a certain point you increase taxes too much, you collapse an economy. The second way they can do it is they can borrow the money. They can go to foreign entities and borrow the money. Well, we know Japan's lost their appetite because they have to rebuild their country after the tsunami. The third way is they can create money. They can print money. We talk about it as printing money, but we really don't print money anymore. We just create blips on a computer screen. That is the classic understanding of inflation, when you increase the commodity of a dollar in the form of availability to the public.
Craig, there is no monetary system that I'm aware of on the entire planet that is gold-backed.
Yeah, well, the Swiss franc has to some extent still it's fractionally gold-backed.
Right, that's what I mean. Completely gold-backed. Right. There is no monetary system on the planet.
And that's why we're on a race to the bottom, and that's why you're now starting to see gold emerge back to its customary position of being the ultimate currency. You hear more talk coming out of the IMF right now about gold as a currency now. It's no longer a commodity. Now, silver's still a commodity. It's not a currency because it's not a monetary metal, but gold is. And that's why today, if you're watching the news, Steve Forbes has said we will probably be back on a gold standard within 5 years if we're going to save our constitutional republic.
Wow. I didn't hear that.
I read that article, and you're absolutely correct.
Craig, we're going to have to take a brief break. Can we hold you over through the break, if you don't mind?
Love to.
Great. This is Mark Wright and Vincent Finelli, the original survival economist, on USA Prepares on 1340 AM, the Ozarks Big Talker. We're going to be right back with Craig Smith, chairman of Swiss America Trading Corporation. Stay with us. And we're back on USA Prepares on 1340 AM, the Ozarks Big Talker. I'm Mark Wright, and I'm here with the original survival economist, Vincent Finelli. And we've been talking with chairman of Swiss America, Craig Smith. And Vince, why don't you resume this interview with such a fascinating man?
Craig, it's great to have you here, of course. Craig, the Federal Reserve is a private corporation. Not everybody realizes that. They've chosen a fabulous name. It works very well. People believe that they are federal, and they believe that there are reserves. How do you suggest that we protect ourselves from what the Federal Reserve is doing regarding the printing of digits, the dilution of our money supply, the insidious theft of our wealth? What should we do, Craig?
Well, I'll tell you, it's funny how you say that because the Federal Reserve isn't federal and has no reserves. It's no more federal than Fred Smith's Federal Express. And yet,
that's a good one. I got to remember that one.
and we tend to think of it in terms as being part of the government, but not. It's a private banking organization, and you're right. They can create money, and look, they learned, like even the Romans did back 1,000 years ago, that the power of taxation by creating currency depreciation is probably one of the most effective ways to get wealth from the people. And that's why when the godfather of communism, Vladimir Lenin, realized that, he made the statement that the best way to destroy the capitalist bourgeoisie was to grind them between the wheels of taxation and inflation. So it makes for every citizen that's in a Federal Reserve system cannot protect himself against inflation if they remain to keep their dollars and their life savings in the form of Federal Reserve notes. Years ago when I met John Exter from the Federal Reserve, he was the man that coined the phrase, a Federal Reserve note is an I owe you nothing. And it's really the truth because they can change the value of that note. A note is a promise to pay. Years ago, a note was a promise to pay you gold and silver. Now it's a promise to pay you nothing. If you look at your dollar bill, it says this note is legal tender for all debts, public and private. Well, if debt is an asset, then I guess people that are in debt are multimillionaires for Pete's sake. But getting back to your question, how do you protect yourself?
Right.
You must be informed. That's why preparedness expos are so critical right now. I mean, I looked at the list of guests that you're going to have doing seminars. Education is the key. When you understand that the Federal Reserve, clear back in 1946, Beardsley Rummel at the Federal Reserve said, hey, take us off the gold standard. Give me the ability to print money, and you'll never have to tax the people. I'll get it from them in the form of currency depreciation.
Wow.
Yeah, and that wasn't enough.
When you recognize that, then you understand you must diversify out of the system. And Vincent, understanding this through economic survival throughout the years, understands the critical nature in owning a certain amount of gold and silver. Think about this, guys, and I don't mean to be taking the whole conversation here, but think about this. If all Americans decided that they weren't going to be tricked by the federal government anymore and through the Federal Reserve entity, and they took all their money out of the bank and bought nothing but gold and silver and food and fuel and things that they needed for everyday survival, the system would implode. We actually fuel the system. We go to work, we work hard, we get dollar bills, we put it right back into the system that keeps them going.
Craig, my understanding is that if every person on the planet wanted just 1 ounce of gold, there's not enough.
That's exactly correct. And that would mean supply and demand. If you had incredible demand and limited supply, the prices would exponentially